Whether it is a few weeks or a few years after an IPO, a fib extension can determine potential ranges where a trend can experience opposition at new record highs. Conditions for an effective fib extension are most suitable when an established uptrend has consistently higher upswings and downswings. The uptrend was relatively stable prior to December, considering it was only a few weeks after normal tenuous trading following an IPO. Naturally, wider price fluctuations reduce the performance of compact fib extensions. A more common scenario has an uptrend line being less effective to intersect with extension levels. The addition of the less commonly used 2.414 and 2.272 levels more closely approximates the volatile downswings in December. Additional extension levels with the default fib levels can help add more detail, but can crowd the chart with too many fib levels in close proximity when the base trend covers a relatively narrow range. This fib extension technically didn't start at a reversal point, but that was acceptable since the low used on September 21st, one day after the IPO, was the only price action available. This was also near the significant IPO price range. However, a proper swing point should always be used. This is a rare exception due to the stock just listing on the market. The new fib extension demonstrates how a larger base trend can help widen the distance between the fib levels to cover wider ranges when volatility increases. A smaller base trend and retracement result in many fib levels having reduced utility because they are compressed closer together. The result is too many fib levels crossing the same swing points, especially with wider candles during the wider price fluctuations in December. Alternatively, an even more compact fib extension can be used, but it is useful to not add additional extension levels and keep the wide increments between the more common default fib levels. This demonstrates how various different fib levels can identify the same reversal areas and the various effects on a fib extension depending on the position of points 1, 2, and 3. The uptrend line was quite ineffective with the fib extensions, but it identified the approximate end of a head and shoulders pattern. Now the fib extension could be used to identify support to the developing downtrend under record highs. However, it is normally better to use a fib retracement for this purpose. A gap down accelerating a head and shoulders reversal provides convenient levels to plot a fib extension as consecutively lower swing points are likely. Even though the right shoulder has such wide price fluctuations resulting in no clear long-term swing points, the absolute high of the developing downtrend's upward retracement starting from January 6th at 136.43 clearly ends with a sharp high on January 25th at 167.30 to plot point 3. Here is the opposite of the uptrend from the IPO. A volatile downward reversal from the head and shoulders begins to stabilize with smaller price fluctuations towards April. That means even though the base trend and retracement cover a small range, the extension levels lose less precision since price action covers a narrow range when the trend begins to decelerate after the gap down. The greater volatility with the upswings in May and March serve as a reminder of reduced precision from rapid price fluctuations. They also demonstrate how fib levels of all kinds are more realistically thought of as approximate areas of potential opposition to a trend. rather than exact guaranteed reversal levels. Levels between 2.618 and 3.618 could have been selected. However, in this case, it is also possible to extend the base trend down to the next upward retracement. The wider increments between fib levels are suited for capturing the wider upswings and demonstrate a case where a level below 1, like the 0.236 and 0.382 levels, are the site of clear reversals after 0.3 of the fib extension.